Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in corporate filings. Today we're looking at Evolent Health, and let's just say there is a bit of a shake-up happening behind the scenes. So Evolent Health, they put out a current report, basically an update on what is going on. And the big news is they reaffirming their financial outlook for this year, 2025. They re-expecting revenues between $460 and $480 million for the third quarter, and their adjusted earnings before interest, taxes, depreciation, and amortization, or EBITDA. That is likely to be between 34 and 42 million. And for the whole year, they still looking at revenues around $1.85 to $1.88 billion, with adjusted EBITDA between 140 and 165 million. Now, this is all before they sell off a part of their business called ECP Holding Company, which they expect to wrap up by the end of the year. Once that sale is done, they'll give us even more updated numbers, so keep an eye on that. They also explained why it is tough to give you a direct comparison of their adjusted EBITDA to their profits. Basically, a lot of things can change that are hard to predict, like debt payments, how investments are doing, stock-based costs, and even just costs from making big company changes. These things can really swing the numbers and they don't always show how the main business is performing. Now, let us get to the acquisition. Evolent Health is selling off Evolent Care Partners Holding Company, or ECP Holding Company, to Privia Management Company. This deal is for $100 million. Plus, they might get an extra $13 million if certain goals are hit after the sale. This is expected to be finalized in the last 3 months of the year. Evolent Health stocks are traded on the New York Stock Exchange under the ticker symbol EVH. This is a pretty standard filing for a company like this, updating investors on their financial performance and major business activities. The report also includes standard safe harbor statements about forward-looking statements. This is basically a legal way of saying that when they talk about the future, like their financial goals or when deals will close, these are just projections. Things could change, and they're not making guaranteed promises about what will actually happen. They point to their past filings for more details on the risks involved. Looking at this report, Evolent Health seems to be strategically trying to streamline its business by selling off a subsidiary. The reaffirmation of their guidance suggests they feel confident about their ongoing operations despite this divestiture. However, the complexity in reconciling their adjusted EBITDA to GAAP net income hints at significant non-operational factors that could impact overall profitability. The sale of ECP Holding Company for $100 million appears to be a move to focus on core businesses, but it is important to watch how these divested assets impact their long-term strategy and financial health. The contingent payment adds a layer of potential upside, but also highlights the dependency on future performance metrics. Alright, that is our breakdown of Evolent Health's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.